All right. Good evening, everyone. Let us start for the webinar now. Thanks everyone for dialing in for tonight's IPO webinar. Here we have Paradigm REIT. We will listed on the main market on 10th June. Paradigm REIT is a Malaysia-based REIT that offers investors a stable and recurring income stream through regular distribution emphasized by long-term lease with reputable tenants. Yeah. The REIT own a portfolio of three retail properties, which is Paradigm Mall PJ, Paradigm Mall JB, and Bukit Tinggi Shopping Centre. As of the 1st of March 2025, all three malls maintain an impressive occupation rate of over 97%. Later on, our Paradigm REIT management will discuss in detail. Here, we're going to honor the company CEO and Executive Director, Ms. Selina Chua. Hi, Ms. Selina.
Hello, hi.
And our Director of Investment, Finance and Account of the Manager, Mr. Chong. Hi, Mr. Chong.
Hi.
Okay, all right. Let us view for the corporate video before run through the presentation. Thank you. All right. Thanks for the corporate video. Okay, let us start for the presentation. Over to you, Mr. Chong. Thank you.
Thank you, Shigin. So, thank you everyone and good evening. So, thank you for allowing us to present to you our Paradigm REIT's IPO scheme. So first, I'll start with the offering summary. So, name of REIT is Paradigm REIT. So it's straightforward. Paradigm is named after our two malls. Sorry, I don't. Okay, the main sponsor is WCT Holdings, and then the assets come from three of the subsidiaries of WCT Holdings, meaning WCT Jaya, WCT Jaraspuri, and also Gemilang Waras. So, and then the type of offering. So WCT will offer for sale 560 million units. So WCT's holding will bring will down from 100% to 65% after the IPO. The detail of the offering is that, okay, there will be total 305 million institutional offering, including 200 million for MITI and 105 for Insti, Jaya Insti. Whereas retail offering is about 254, of which 190, close to 195 million to our WCT shareholders are restricted offer unit. So in the ratio of 1:8, meaning, you know, every unit will be offered to offer to our for 8 units of WCT shares. And then employees and directors will be the pink form will be about 27.8 million. And then Malaysian public, Bumi 60 million, and non-Bumi 60 million, altogether 560 million. So there will be a lockup period for, you know, the sponsor for 6 months. Meaning it's like a moratorium, they cannot sell. We cannot sell the shares after the IPO, the remaining 65% that we hold. Next slide, please. Okay, the yield, I mean the REITs, it's just like any other, you know, REITs in the market. So we will distribute at least 90% of the profit to our unit holders to eligible for tax exempt. So our target is to distribute between 98 to 99, up to 99% of the profit. So that's the thing. And then there are some clawback relocation. The scheme is that, you know, mainly is for the MITI location. Let's say, you know, in the event the MITI shares are not fully taken up, it will first goes back to the Bumi public, and then to the institutional investors, and then to the general public. And the principal advisors is book runners and book runners and sole managing underwriters and Maybank, and the other 2 joint book runners and joint underwriters are CGS, M Invest, and RHB. And the trustee of the REIT is RHB trustee. Next slide, please. Okay, on the Paradigm REITs, on the details on the asset, I'll pass it to my CEO, Miss Selina Chua. Selina, up to you.
Okay, thank you, Kianfa. Good evening, everyone. I'm just going to quickly take you through the 3 properties that are going to be part of the portfolio of Paradigm REIT. So Paradigm Mall PJ, Paradigm Mall Johor Bharu, and Bukit Tinggi Shopping Centre. As you can see, all 3 malls are very strategically located in the PJ area, in Johor Bharu, as well as in the Klang area. And so the portfolio is rather diversified, and because of how it's diversified, it is also very resilient in terms of driving income stability. And part of the group, whether it's WCT or the Paradigm REIT, we do have extensive network in sourcing and acquiring for financing for real estate assets. And I think Paradigm has very strong anchor tenants with many recognized brands within the group. The team that's managing the 3 malls are all experienced in terms of many years in the market, including myself, more than 30 plus years in doing retail. And Kenfa also with me, who is looked after all these properties from the day they were conceived to now. Okay, so the entire portfolio will be 2.4 B in terms of asset value, with the total revenue in 2024 of 217.7 million and net property income of 147.2 million in 2024. Okay, next slide, please. Okay, let's focus a little bit on the details of each of the mall. Bukit Tinggi Shopping Centre is valued at 680 million with 1 million square feet GLA. It's 100% lease because it's leased to one tenant, which is Aeon, as a master lessee. And they take care of all the maintenance and the security inside the mall. So we only take care of the car park as well as the hardware like the aircon chiller system. Okay, next. Paradigm Mall, PJ, that's valued at 600 million, 700,000 square feet of NLA. It's 97.7% lease. The weighted average lease expiry is 1.54 years. There are 273 tenants in the mall. And then for Paradigm JB, that's valued at 1.157 billion. And it's 1.3 million square feet of NLA, 99.3% leased. 1.56 years for the weighted average lease expiry. There are 449 tenants within the mall. Okay, next slide, please. Okay, next. Okay, this is a picture of Aeon. Yep. It's just been repainted, just completed. Next, please. Okay. Bukit Tinggi Shopping Centre, it's a freehold property, about 16 years old. There are 3,343 car park bays, which is more than what is required by the authorities. So actually, there's some excess space that car park space that we use for other purposes. We'll discuss it later. Bukit Tinggi Shopping Centre is a neighborhood mall with direct access via a few major highways. And the LRT is actually already completed, but will only start operating in September this year. It's a retail, 3 retail floors plus a mezzanine floor with car parks on the surface, basement, elevated, and also recently we painted the rooftop with car park lots too. Okay, some recent upgrades that we have done is like increase the car park capacity, that's for the rooftop. Resurface the ground floor car park, the areas that have sunk. And we repainted the rooftop car park as well as installed LED lights. So what we did was replace all the fluorescent tubes with LED lights. So the mall is a lot brighter, safer, and we save more electricity. Okay, some future plans. It's not so future. We've already converted 98,000 square feet of the car park space on the 3rd floor car park into a go-kart circuit, and they should start operations mid of June. Okay, facade painting is already completed. We are now doing the landscape enhancements at the moment. So like I mentioned earlier, we have one major tenant, and that's Aeon, who takes up the space, and they manage the tenants within the mall. And this is probably one of their top performing outlets. And we have been making full use of the excess parking, the ancillary areas, that is the surface car park, for some food fair, bazaars to bring in more traffic to the mall and also increase the car park revenue. At the same time, it also brings some new shoppers to the mall. Okay, next. Okay, this is a picture of the bazaar that we did in the open car park. And from July onwards to end of the year, there will be even more such things. Not always food, sometimes it's health fairs, sometimes it's fun fairs. So it has not to cannibalize the retail tenants. Okay, and the car park on the 3rd floor, it's been converted to the go-karting. That's what it looks like. Okay, next. Okay, we've already completed the facade painting, and you can see the before-after pictures of the car park after we change all to LED lighting. Next. Okay, next we look at Paradigm Mall, Petaling, Jaya. That's the mall. And next, please. Okay, it's a leasehold property with about 12 years old. 2,343 car park bays. It's a neighborhood mall with office tower, a 32-story office tower on one side, and a hotel, the Le Meridian PJ on the other side. And then around it, there are also 2 service residents, which is Azure and Sapphire. They're all fully sold. The shopping mall has 6 retail floors with a low ground floor and 2 basement car park, and an elevated car park as well. And what we've done in the recent months is that we've converted more common areas into F&B and retail kiosks, and modified some of the layouts to rearrange the tenants so that similar tenants are grouped together. So it's easier for shoppers to find them. And we've also added more directional signs and more lit signs within the mall with some mood lightings. And then there's the LED screen that's been installed at facing the LDP. And then also there will be some LED screens and light boxes put at the highest traffic area for advertising purposes. That's for advertisement income. Okay, the mall has been enjoying high occupancy, especially after the COVID. Our retention of tenants is also very high, because we had a very flexi scheme of lower base rent with percentage, especially rental, especially during the COVID time. And I think the tenants appreciate us working hand in hand with them. And then we had a bulk renewal last year, and the next bulk renewals will be in 2027. Okay, next please. I think if you look at the tenant mix, you can see that it's quite diversified, with F&B and fashion contributing about 47.8% to the gross rental income. But if you look at the trade mix, the F&B is only 19.7%. That is much lower than the industrial standard now, which is about 30%. So there's some potential to increase the F&B. And later on, we'll show some slides where we are converting some of the second floor area to more F&B. Okay, next. Okay, these are some of the tenants in the mall. It's a mixture of both local as well as some international brands. Okay, next. Next slide. Thank you. Okay, so these are some of the asset enhancements that I talked about on the second floor of the mall. That's the top floor. We've put in some new F&B, and we've dressed up the area so that this is F&B zone. And we didn't want the standard chain tenants, the standard kind of food. So we put in some very interesting food like kam ling gay. Then we put in yipo from Seraman, and Sinki chicken from Johor Bharu. Then there are a few, I think, semi bakute also. So we're looking for one or two more similar kind of unique tenants to put in this floor. Okay, next slide, please. Okay, this is, we installed the LED lights at the entrance of the mall and put in the fairy lights as well, so that the entrance is more defined, and that when people driving by, they notice the entrance of the mall. And on the right-hand side, you see that's the escalator going down into the basement from the ground floor. That's the highest traffic area. So putting in light boxes and an LED screen there for advertising income. Okay, next slide, please. Okay, snapshot of Paradigm Mall Johor Bharu. You can see it's a very nice long frontage along the main highway. If you're traveling from KL down to Singapore or vice versa, you definitely pass this mall. And on top of the mall is the Hyatt Place Hotel and the Paradigm Residence, which is fully sold. Okay, next slide, please. Okay, this mall is freehold, about 7 years old. It's got 3,000 over car park lots. It's one of the largest shopping center in Johor, and 20 minutes drive from the Woodlands checkpoint. It's 6 retail levels plus a mezzanine floor. The mezzanine floor is a food court, and then there's a level of cinema together with a convention center. The convention center is about 38,000 square feet. So we conduct a lot of like convocation, wedding, banquets, as well as some mini concerts as well at the convention center. Okay, the Hyatt Place is it's usually very, very full at night, on weekends, and then the Paradigm Residence is already fully sold. Some major enhancement we've done for the mall is repainting the interior of the mall, installed the car park guidance system, and the cashless payment system for the car park. That is to speed up the entry and exit into the car park, because it's usually quite crowded on weekends. And we have installed some digital and LED signage panels inside the mall for advertising purposes. And we have also reconfigured some tenant unit to better utilize the common area. And we have also spent a lot of time studying the chillers, because one of the key things we've been doing is on energy conservation. So the chillers, the aircon system takes up the most electricity. So that's the area that we've been focusing on to save electricity. Okay, some major works we've started already. The interior painting should complete by third quarter this year. And then the upgrading of the restrooms, we should complete by end of this year. And hopefully by middle of June or sometime in July, we'll start the license plate recognition at all our car park entrances. That will also speed up the entry and exit to the car park. Okay, if you look on the right-hand side, the occupancy has been growing steadily, especially after COVID, and our retention rate is also very strong, except for I think the beginning of this quarter, because there was a big unit, a tenant over 2 floors, and we've taken back the unit and cut it into smaller lots so that we can have better rental as well as better variety of tenants, because there are some missing traits, like there's no baby stuff in the mall, so we brought in a baby shop. Okay. And this mall is probably in JB is probably the one with the most amount of entertainment, from ice skating to rock climbing to roller skating, trampoline park, cinema, karaoke, archery, etc. So it is really a mall that you can spend 2 days, 1 night, stay in the hotel, and then do a staycation within the mall. Okay, next. Okay, from this slide, you can see that in terms of the F&B and fashion stores, they contribute about 40.3% of the total gross rental. And you can see our F&B actually is very low. It's only 13.1%, because this is a very, very old mall that we took over and revamped. And so technically, there are some issues about putting in more F&B. But over the last 7 years, I have increased F&B element from 9 to 13%. So it's a substantial increase, and we'll continue to increase as and when leases expire, and that particular unit, technically, if it's possible to put in the M&E, we will do so to increase the F&B element. Okay, next slide, please. Okay, these are some of the tenants in the mall. Again, it's a mix of local as well as international tenants, with a sprinkling of uniquely Johorian tenants. Okay, next. Okay, this is the escape park. We have escape in Paradigm PJ, but it's in the outdoor area. For Paradigm Johor Bharu, the escape park is inside the mall, and it takes up all the common area and the airspace within the mall. Only 4 games were open in December last year, but as of April, about 80% of all the other games have already started. Okay, next, please. Okay, these are some of the asset enhancements that we have done for Johor Bharu. One of the things I mentioned about the car park guiding system. We put in the camera car park guiding system and a lot of other things to speed up the movement of car parks in and out of the cars in and out of the car park. We've also added a lot, not new CCTV, but added a lot more CCTVs, cameras into the mall, because we wanted the shoppers to feel safe, because safety is one of the key things about Johor. So by making sure all the blind corners in the mall is covered, we are able to give a lot more security to our shoppers. Then on the right-hand side, you see the toilets. We've upgraded it. It's still ongoing until end of the year. Okay, next. Okay, next slide, please. Okay, we have 723 tenants in the portfolio, so that ensures that we are not over-reliant on any particular tenant. And even all the top 10 tenants together only account for 31.4% of the rental income. And so you know, there's not a single tenant that accounts for more than 5% of the gross rental income. So that ensures that we are pretty well diversified. And we do have strong anchor tenants like Uniqlo, H&M, and Lotus, Village Grocer, you know. And I think you can see that our tenancies are a mixed bag of, like I said, international as well as domestic tenants. Okay, next. Okay, we have, if you look at this slide, PJ and JB together, look at the top 10 tenants. There's only 2 overlapping tenants, which is GSC Cinema and Harvey Norman. Okay, next. Okay, if you look at this slide, you can see the weighted average, reason being that there's bulk renewals for JB next year, 2026 in November, and then the following year, 2027 in May, June, that's for PJ. Okay, and for Aeon, the Bukit Tinggi, the Aeon lease, in November 2026, we have an option to increase the rental up to a cap of 12%. Okay. So as you can see, the all the leases are spread out, and that will help us to maintain a good stable cash flow, and the occupancy rate of this whole portfolio is you know, close to 99%. Okay, next. Okay, this is our board of directors. Tan Sri Cheryl, and so on and so forth. You can see they are all very established people in the industry, and well respected also, with very diversified. They're all from different areas, like Mr. Kwa, he's from an accounting background, and so there is lots of different diversity within the board of directors. Okay, next slide. Okay, this is the management team. Myself, I've been doing retail malls from the time I graduated to now, so more than 30 plus odd years. And I listed the first REIT in Singapore, and this will be my listing of a second REIT. And Genfa, our Director of Investment, Finance and Accounts, he has been looking after the finance and accounts for the WCT group for a very long time, and he understands the history and the beginnings of every single of our malls, so he's a great addition to the team. And then the others, the rest of the team members, many of them, especially the retail ones, they were people that worked with me in CapitaLand for many years, and then they came over to join me here. Okay, next slide, please. Okay, next. Okay, so when it comes to the financials, I'll let Genfa take over from here so that he can better explain the numbers to you all. Okay, Genfa?
Okay, thank you, Serena. So, okay, I think first we talk about money here. So, okay, income statement. So as you can see, from 2022 and up to 25, so we see a spike because from 22 we are just recovering from COVID. So 23 we are almost back to the pre-COVID level, and in 24, in terms of revenue, we have surpassed the so-called pre-COVID one. So I mean, to give you some perspective, in 2019, our total revenue for the 3 assets is about 200 million, and net asset NPA, net property income, is about 135 million. So essentially, in you know, in 2024, we have surpassed, you know, the track record that we have achieved in 2019, and we expect to do better in 2025, based on, you know, the first 3 months results. So, you know, we are positive that, you know, we are heading to what we have projected in this. And for REIT asset, the one of the most important how you call it, the marker is this MPI and MPI margin, because MPI margin essentially it dictates, it tells the story that if the profitability of the assets under the management. So I mean, in 2019, that's when, at the peak, we achieved something like, close to about 68% of GPI margin. So now we are almost back to the same margin in 2024, and expect to achieve higher of 69.3% in 2025. I mean, to give you some perspective in comparison to the industry. So under the Malaysian REITs, the tier 1 mega malls, they are doing something like they are in the MPI margin of about 70%. I mean, in excess of 70%. So in the 70%. So, and then in terms of our peers of the same category of assets, I mean asset size and market capitalization, they are below 60%. So mainly, the main contributor of our high MPI margin is because of our high occupancy, and also our I would say very competitive, very lean operating overhead. So we hope that, and at the current occupancy, our rental rates are just slightly above, the pre-COVID level. So we expect that there are plenty rooms to grow our rental rate further. But there are not much room to grow on the occupancy because we are already at 99%. So essentially, it's I would say fully occupied. So the 1%, then hopefully we can utilize some of the the general space to create more. But I would say there's not much room to increase occupancy. So the only way to go is the rental rates. So, and other readers like the PAT and distributed income are just waterfall down from the MPI. So you have a high MPI and MPI margin, then we will have a high distributable income. Okay, next slide, please. Okay, this just now I was mentioned about the operating costs. As you can see, this table on the left, so breakdown of property operating expenses. So in 22, it's about sorry. Our OPEX is about 35.6%. And in 22, there's the slight increase in 39 because in 22 we have how you call it, a reversal of some of the doubtful debts that we provided earlier. So, and in 24 is more reflective of the normal operating environment. So, and with the high revenue, so we also bring down the in terms of percentage our OPEX percentage. So, I mean, to give you some perspective, for our Paradigm PJ Mall, so our OPEX per month, we're talking about, per square feet is about 3 ringgit, and then Johor is lower because of the bigger size economy of scale. So most of the mall in town, they're operating in excess of 3. And on the right hand side, the breakdown of non-operating, so these are the manager's fees. So we hope it will be pretty stable, and also it go in line with the performance of the mall. So okay, next slide, please. Okay, these are some of the financial position of our mall. So the total asset value is about 2.476 billion, and then it'll be financed by about 1.6 billion units, and debts of about 840 something million, 841 million in asset. And our gearing ratio is about 34%. So, and under the law, the REIT regulation, so we are governed by the law that the debt ratio at max is 50%. And our internal guideline is that we will not cross we will try to gear not to go beyond 40%. Next slide, please. some of the investment strategy moving forward, will be, I think REITs is, the key is that, make sure that, all the assets are profitable and are not dragging on the whole portfolio. So in moving forward, our asset management strategy will be on advertising, promotion campaign to drive higher sales, and then, identify potential asset enhancement. So all are bottom line driven initiative. So because every cent that we save, it flows down to the bottom line and then also to the unit holders. So just bear in mind that at least 90% of the money the profit will be distributed back to the unit holders. And then, on the other one, the other strategy is on the capital and risk management. So one of the biggest cost is interest cost on to REITs. So for our REITs, so the 841 million that we will raise from the market will be in the form of medium-term notes, rated medium-term notes. So for our medium-term notes, so we have two tranches. The big chunk of it, about 735 million, will be rated AAA, and then the balance of 110 million, 150 million will be a AA minus. All in all, the branded interest cost we talk about, below 4.5%. So, and because of what happened now in the market, so there's a blessing to us, the capital market, the bond market, actually the yield actually come down quite substantially compared with beginning of the year. And compared with beginning of the year, so the MGS, the Malaysian government's securities, actually comes down by 15 to 20 basis point. So meaning 0.15 to 0.2%. So it translates to a lot of money to us. So, every year, because of the decrease in the MGS yield, so we have compared with the beginning of the year, so our borrowings, we talk about a saving of more than 2 million of interest. So we will continue to do that, and then what our strategy is that we will try to go for a longer tenure MTN, so that to have a certainty on the interest rate, because we think that the current interest finance cost is very competitive, and we want to lock in for a longer term, meaning maybe we'll go for 7 and we put more weightage on 7 and 10 years, on the MTN issuance. Next slide, please. So acquisition strategy. So we will prioritize assets that we call it a yield accretive, meaning compared with our borrowing cost of about, let's say, 4.5%. So the new acquisition definitely have to give us more yield than our finance cost, because that is the minimum we can do. So we can take. So we will focus on assets with stable cash generations. So because by the virtue of the guideline of the REITs, we cannot venture into any assets that involve in operation. So REIT essentially is like the owner of asset that collect rentals. That's all we can do. So, and then even development we can only do up to 15%, but our internal guideline is not venture into any development. So, and our acquisition criteria, as you can see, so it has to be yield accretion and location. So it has to be in good location, and brand and image, and quality of tenants and capital appreciation, building design specification. So all in all, in summary, is to add value and then bring in more cash flow and yield to the unit holders. So That's, I think, our objective is very, very clear. Next slide, please. Okay, for a start, we did the sponsors, WCT Holding, have undertaken to give the REITs a first right refusal for, the 3 hotels, meaning Hyatt Place in Johor, REIT Meridian, and Premier Hotel. So likely these 3 assets will go into the REITs in 26 and with a guarantee yield. So we will go on a buy and lease back model with WCT, the sponsor. Something similar with like what Pavilion Group did for the Pavilion Hotel. And the other perspective is that, the airport mall in KLI2 Gateway. So this is a very exciting asset, but it may take a slightly longer year because a longer period to do the injection because of some technical technical fulfillments, for the injections. And also, the shareholders part. So, but we do not foresee any difficulties in completing the injection for the 4 assets. And then for all the properties in, assets of WCT Holding, so WCT actually give the right of first refusal to Paradigm REITs for any future asset disposal at their end. Next slide, please. And ESG initiative, for Paradigm REITs, ESG initiative very much cost driven. So we will only spend money on, we focus on initiatives that that contribute to our bottom line. So and also enhance the distribution yield. So other than that, we will not do, we are mindful that we are spending the money of the unit holders and handling the money of the unit holders. So we will not spend money unnecessary for the sake of, compliance and things like that. Okay, that's all. So I think that's end my presentation. So thank you. See you in.
Hi, Mr. Chong. Thank you, Selina. Thank you, Mr. Chong, for just now presentation. Okay, are you all get ready for the Q&A section?
Sure.
All right. Okay. The first question asking for the rental revision. Could you share the rental revision strategy across your properties and which of your mall have the highest rental rate per square foot?
I think moving forward, right, in terms of highest rental rate, I would say at the moment is PJ. Actually, if you look the slides that we showed you earlier, the average rental rates, but that's because I think for JB, what happened was they were much more affected. The mall was much more affected by COVID because the borders were closed, right? And a lot of the shoppers actually come from Singapore. So at the last renewal, because the renewals come in cycles, right? So the last renewal cycle was in November 2023. And we were able to increase the rental quite substantially that year because prior to that in 2022 and 2021, the rentals were on a low base rent with a higher GTO element. So when the next leasing cycle come, which is in November 2026, that's next year, we foresee that JB would have a big spike again in terms of the rentals. But at the moment, PJ has the higher rental per square foot, bigger, more mature mall. But if you're talking about rental reversion strategy, it's basically quite clear for us that every tenant, every type of trade is different. And we actually collect all their sales data. So with the sales data, we're actually able to study, right, their occupancy cost. That means the amount of rent they pay to as a percentage of their total sales. So from there, we can actually work on our rental increase for each renewal based on their sales performance. And these sales are audited, so we can actually, I foresee we can grow the rental substantially in JB because after the last renewal, typically when base rent goes up a lot, then because it's a base rent or percentage rent, whichever is higher. So when your base rent goes up, your percentage rent typically will drop. But that didn't happen in JB. In fact, what happened is that the percentage rent has grown last year and this year, and it's still continuing to grow. So which means that the sales, we are driving more sales to the tenants, or the new tenants are attracting more sales, and that the average baskets has actually gone up as well. Okay.
Okay, from this question, and what is the average cap for the rental revision?
What's the what?
How many percentage for the cap?
Cap, the cap, is it?
Yeah,
There's no cap. There's no cap. Because usually, unless it's written in the contract that, you know, the rental increase is capped at a certain rate, but most of the tenancies, there isn't a cap except for the Aeon lease, which is capped at 12%. That's for Bukit Tinggi Shopping Centre. But most of the other tenancies, there's no cap. So if they have performed very, very well, then we can actually really increase the rent to based on the sales, you know. And it's something that's very easy to negotiate with tenant, because based on sales, they're always very happy to pay you more if their sales is good.
okay. Okay, about the financial, could you explain why there is drop in MPI for financial year 2023? Were there a one-off item or structural factor involved?
Yeah, there was a one-off item in 2022. We had some large provision for bad debts because a lot of tenants were owing rental, and so we made provisions for it in 2023. But in 2022, then in 2021 we made a lot of provision for bad debts. Then we recovered them in 2022. There was a big write back in terms of provision for bad debts. We provided in 2021 because some of the tenants were owing us rental. But come 2022, we actually spoke to the tenants, and we had a very active way to sort of like help them pay in installments. And then what we did was we had a new program called the Bonanza Voucher Sale, whereby or Voucher Bonanza Sale, we launched a loyalty app whereby all our shoppers can buy e-vouchers, the e-vouchers that can be used in all the malls at a 20% discount. So that was very good because you know, we were all feeling a bit poorer after COVID, and everybody was feeling that they need to save more money. So the 20% became very attractive. And so that also helped to drive sales to our tenants, because after COVID, a lot of them suffer from cash flow problems. So with that program, it really helped to drive, I think up to this date, probably more than 20 million of sales to our tenants.
Okay. Okay, they're asking for the future upcoming project in the pipeline. I think just now we already mentioned it with
Yeah, I
three
think
hotel and the KLIA Gateway too. Yeah. Is there anyone to add on?
I mean those are the ones for now. But anything else that if WCT develops they and want to sell, we have first right of refusal.
Okay. Okay. What is the remaining tenant for the lease with Aeon?
It's up to 2032, but every 3 years we have a right to negotiate the rental increase, but capped at 12%.
Okay.
So 2026 one time, 2029 one more time.
This is okay. Asking the Paradigm Mall JB has a higher occupancy rate compared with other mall. Could you explain what is the factor contribute to it? I think just now you already explained for it, the basket size already increased, and then more on the Singapore investor come
I
in.
think
Do you have
about the occupancy rate, why it's higher is because at the moment, the mall is in the southern region, which is enjoying a real big resurgence and growth. And we're seeing a lot of more and more Singaporeans shopping in the mall. So the average basket, like I mentioned earlier, bigger, because I think a lot of Singaporeans are feeling the very high cost of living back in Singapore. So we're seeing more of them crossing over and shopping in the mall. And also because the Johor itself has had a lot of growth in terms of new industries, in terms of new job creations, and in terms of a lot of international schools opening in Johor. So there's been a big growth there in terms of the universities and all that have opened there, from Reading, Southampton University, or Nottingham. So we're seeing more and more foreign students from China, as well as Koreans, students with their families actually studying in these schools, and now shopping and living in the mall.
Quite high for the footfall at JP. Okay.
Yes, the footfall is growing in both malls.
Okay, they're asking for the peers. Who do you consider to your closest peers in the retail REIT space, and how does Paradigm REIT differentiate itself? Yeah.
Yanfa, you want to take this one, since you were talking about the REIT cap size and all that?
Yeah, I think we will not mention name. So if just go to the if you just go to the MREIT website, it's very easy. Just type MREIT Malaysian REIT. So it shows the list of all the you know the REIT, the listed REITs in the one. So you see the market cap of between 1.5 to 2 billion, 1 billion to 2 billion. You see their names are. So as a matter of fact, as I say, earlier, so we position ourselves closer to the I would say the elite group, those the bigger size REITs. So with high profitability overall now we are targeting now we are projecting 69% MPI margin. So hopefully we are a bit of luck at the southern part we can cross the 70%. So you see, those are of the similar market cap size. They would overall I observe that they have a much lower MPI margin, below 60%. So because we are new, that's why I think but on internal market cap we are comparable to the few if you can just see there in the MREITs.
Okay, thank you. Okay, just now we also discussed like during the COVID, the hard period time, and then you also give her the render installment for the option. And do anything want to add on for this?
I think during the COVID period, we worked very closely with the tenants. Other than the rental installment, we also have flexible rental schemes where lower base rent, higher percentage rent to help the tenants. We also gave some rental rebates to tenants, and we also restructured some of the leases, and we gave them installment payments. So I think what the tenants like was that we worked closely with them to help them through. And then when immediately after the borders were open, and also when people could come back to shop, we tried to push sales back to them by doing the voucher bonanza sales, by selling our mall e-vouchers at a 20% discount. That's substantial, and these vouchers can be used in the substantial number of our tenants, including all our electronic stores and departmental stores. So that was really popular, and that helped to stimulate sales for our tenants immediately after COVID. And I think our tenants really appreciate that.
If I may add to what Selina have said, during COVID time, I would say we give a lot of support to our tenants. So we make sure that they survive, and so are we. So what the occupancy rate that you see today is not by chance or any luck. So the few years during COVID time, we really give them a lot of support because we value our partner. We see our tenants as partner. So we make sure they survive, and then then when they do well, we will do well. So that reflect in the occupancy. So we make sure that our mall are not empty and our tenants survive. So
Actually, I think because we supported them, so when now that times are better, a lot of them have not only opened additional brands in our malls, but they've also brought their friends to take up units in our malls. I think this kind of relationship goes a very, very long way.
long way. Correct. Okay. Thank you.
Okay, thank you. Okay, what marketing or tenant mix strategy are in place to increase the footfall at your mall? Are there any unique initiative that you set your mall apart, like different with others?
Like I mentioned before, we have this voucher bonanza sale. I don't think any other tenants or landlords have done it, where we actually give a direct 20%. So if you buy 1,000 ringgit worth of vouchers, you only pay 800. It's a direct discount, and that was truly appreciated by our tenants. And we continue to do it for Chinese New Year and for Raya. So it you get better value for your money, and this is all of us, we put in all shopping malls, we do put in money for marketing, but when you put in the money for marketing, you don't know how much of sales is being driven to the tenants. But even if you have a lot of footfall, but if it doesn't translate into sales for tenants, it doesn't help the tenant in any ways. So sometimes when we had straight after COVID, when we did a anime fest, it was fantastic. The whole mall was bursting at the rafters, the LDP was totally jammed. Everybody was calling me and complaining that they got stuck in the LDP because of my anime fest. But did that translate into better sales for tenants? Not really, because it was so crowded, the true shoppers don't come, But it was good because it was one of the biggest event we did after COVID to sort of dust all that dust and cobwebs off our shoulders, and so it was good to do, but it is not an event that we will repeat frequently because it doesn't really drive sales. In fact, the weekend when we had the anime fest, the sales was actually a little bit lower than our usual weekends. So where's events that we constantly focus on, because our malls are really community malls targeted at the families. So by putting in exciting family events like the cheerleader competition, the interstate cheerleader competition, the vegan fest, the veggie fest, this kind of things, they are which are our unique events at our malls, or the garden festival, the city garden in the city festival. These are very our unique events. They not only drive footfall, it also drives sales to our tenants, because it's the families that come in to for this kind of events, and then they eat in the mall, they spend in the mall. Like during the cheerleader competition, when their kid won the competition, they bought them a gift. When the kid lost the competition and cried, they also bought them a gift, you know what I mean? And the parents and the grandparents, while waiting for their kid to compete, they will eat their lunch, their dinner, and drink their coffee in the mall. So it's such events that is very unique, that continue to drive sales to our tenants.
Okay, thank you for the explanation. We quite understand for it. Okay. Is there any concentration risk for any key tenant contributing to a significant portion of rental income? And how are you managing it? I think just now you mentioned like even the top 10 also just 31.4%, right?
Correct. And there's not a single tenant that accounts for more than 5%. So no, there's no major concentration. My focus actually is more trying to avoid what we call overlapping tenants. There are some in, especially when it's a large mall like Paradigm JB, 1.3 million. But definitely whenever the renewals come up, we should try to reduce some of these overlapping tenants and try to either reduce their size or bring take their space, chop it up, and bring in trades that are missing in the mall.
Okay, quite good diversification of the tenant. Okay. Do you foresee any margin pressure from increase like service charge, utility cost, or tenant incentive over the next few years?
I think we hear not so much the service charge, but that in the market there's been all these rumors, right, about the increase in the tariffs. So we've done some calculations, and we think the increase will not impact our numbers very much because we've embarked on some conservation, energy conservation programs, and I think the savings far exceeds that of the tariffs if it should kick in. Now, if the tariffs don't kick in, then it's a bonus for us, or because of our energy saving, the conservation programs that we kicked in.
Okay, and then you also install the solar, right?
The solar is for JB only. There's a solar panel. There will be energy saving, of course, but the biggest chunk is actually in the savings in terms of the energy from the aircon, whereby we've had put in some systems from inverters in our HU to filters for our cooling towers.
Okay. Okay. How has the shift in consumer behavior, like because of inflation and rising cost of living, do you see any impact on footfall, tenant sales, and leasing activity across your mall?
Not so much for our kind malls. Our malls don't have a lot of branded goods. Our malls are your everyday goods. Good times, bad times, you still got to buy. You still need, from pharmacy to the everyday kind of goods lah. We don't have super branded goods, so which are usually a little bit more impacted when there's when people feel that they have less disposable income. Yeah. So in fact, because we have the hotels that feed the shoppers into our malls. I don't think the tourists that come to our mall, whether it's Singaporeans or the business travelers at PJ, they feel the impact lah. They actually find goods in our malls very, very cheap, and so they not cheap lah, I would say value for money. So I don't think we are very impacted at the moment. Yeah.
The next is, could you elaborate the recycling use oil initiative?
We work with a company that helps us collect all the used cooking oils from our F&B tenants, and then they recycle it for certain purposes, which is good because then all this cooking oil is not thrown down the trap, right? The floor traps that a lot of people do. It's good for our floor traps. You don't have and for our grease interceptors. And at the same time, this used oil is then used for a useful purpose. So this was something that it's a company that came to us, and when we heard about it, we felt that was good, and then we worked together with them to assist them to get our tenants on board. It's both in PJ and JB.
Okay, also part of the ESG.
Yes, it's part of the ESG for sure. Yes. I think the energy conservation, the rainwater harvesting, the used cooking oil, the EV chargers, these are all part and parcel of our ESG.
Okay, the next question asking, could you elaborate more on the future acquisition? Is there any profit guarantee? Do you want to explain more about this?
I think for the hotels, yes, it's a guaranteed yield for the hotels because it's on a sale and leaseback kind of model, right? So for that, yes. If you're talking about Gateway at KLIA 2, then it's not a guaranteed yield, but the mall it's performing extremely well and has potential to do even better because at the moment, in terms of air flights, is only 80% recovered. So there's still another 20% more to go. But it is already, you know, the yield is already very, very high, double digit.
Okay, thank you. All right. I think we answered almost all of the question tonight. Okay. Before we end for the webinar tonight, do you have any closing remark for our investor or retailers?
Kenfa, our money man, are you gonna say something?
Yes. So I mean, I would say lah. So you know I mean the question raised to me many times by investors and also fund men and also you know journalists and analysts. So the turbulence because rising from the you know the tariff war and also the uncertainties. So how confident are us, you know, to launch the IPO, and what is the things that you know that attract that investors should buy into this this Paradigm REIT? I would say the answer is simple So because REITs are very defensive stocks so essentially it's like you know you collect dividend. You collect dividend and then there's guarantee that the company will distribute almost all the profit as dividend. So it's as good as something like FD lah. So and currently based on the launch price and we're talking about 7% yield yield as to you know the dividend received, meaning you know at 1 ringgit. So we expect it to collect 7 cents per annum, and the dividend is twice per annum, meaning you know every 6 months you receive dividend. Rain or shine, you have dividend. But the other thing is that you know we are not like tech stock you know where a lot of volatility. No, these are very stable and you know it growth consistently. So maybe 6-7% at sometimes at good times maybe 10% a year. So every year rain or shine you receive your money, your dividend. That's all I can say So it's a very stable and defensive stock.
Okay, thank you, Mr. Chong. Selina, do you have anything you want to add on?
I think if you look at all the REITs, Paradigm REIT is probably the only REIT with such a huge shopping mall in the portfolio. Okay, our JB 1.3 million square feet. Most other REITs either don't have a Johor presence or maybe very, very small presence, not necessarily a full shopping mall. So I think the growth is actually in this southern region for the next couple of years. So I think having a property in and a large one and a very well-run mall supported by the hotel, I think this is a very unique proposition and puts us in a very stable and you know, not only stable, but, you know, a lot of potential growth especially come renewals is in November 2026.
Okay, thank you once again. Thank you, Ms. Selina Chua and Mr. Chong for tonight's presentation. And congrats on upcoming listing on the main market on 10th of June. Thanks, everyone.
Okay.
Thank you very much. And good evening.
Okay.
Thank you.
Good night.
Bye.
Bye.
Bye.